There was a bit of a relief rally on the share market. Relief that the US seems to have avoided a financial crisis by reaching a deal to suspend its debt ceiling for 2 years. Basically, the world's biggest economy is set to run out of cash in a week, but it's kicking the can down the road. It's estimated that America will need to borrow another $1 trillion by the end of this year, which won't be an issue as long as people continue to believe that the US can keep paying interest on its debts, despite its political infighting. Locally, the ASX 200 and All Ords both went up by around 0.8% today, with gains in almost every sector. IDP Education was today's worst performing stock. It's a company which administers the IELTS English test for immigration, but its shares plunged because the Canadian government said it'll start accepting English test results from IDP's competitors, which is bad for its market share. Overseas, it was a strong day for Japan's Nikkei, which jumped to its highest level in over 30 years, and Wall Street finished trading sharply higher. The Aussie dollar is buying 65.5 US cents, while oil had a decent jump and gold prices are steady. And finally, the amount of rent we're paying has hit its most unaffordable level in a decade. On average, Australians are paying about a third of their wages on rent, even more if they're from low-income households. Unfortunately, there's no sign of this situation changing anytime soon, as it typically takes years for Australia to boost its housing supply meaningfully. And that's finance.